Hi, everybody. It's top of the hour, and we're super excited to have you here with us. If only remotely. We are located in Denver. We have an office actually right outside in Littleton, and we'll be relocating shortly to an office in downtown Denver. So we'd love to meet with you guys face to face. I always like to put that out there. After all, this is a relationship business. But in today's world, social media is part of that relationship. So we're glad to have you today. Today, we'll be talking about turnkey investing, the best thing to do. And we call it that because, well, frankly, a lot of us were good at selfers for a very, very long time. So what we would like to do is get started here shortly. I'm hearing that my audio is breaking up a little bit. So give me one moment. I'm going to call in with some fresh audio, and we'll get started. going. This is not okay. Okay. But then everything that happens.
You guys hear me all right?
You don't have your.
All right, can everybody hear me? Okay, good. Sorry about that technical glitch there. Let's go ahead and get started. All right, so the next best thing to do it yourself. We're going to focus on a turnkey model for managing an entire real estate process and maximizing investment returns. We call it the next best thing to do it yourself because, quite frankly, nobody can ever care about your money quite the way you do. But we pride ourselves in Direct Source Wealth in creating systems and processes that ensure that we have a common interest and that our interests are aligned. So we're going to go over those processes today, who we are, what our background is, as a way by way of introduction, so you can get to know who Direct Source Wealth is and how we're looking out for you. If you have specific questions that go beyond that, that is best handled in a personal, relationship-based capacity. And we'd be happy to discuss anything directly with you regarding your personal investments offline. So first thing to start, we've got to go through our disclosures and disclaimers. Basically, we're not selling an investment. We're not trying to get you to do an investment. We just want to educate you right now on who we are. Yes, we do investing. And at some point down the line, it might be appropriate to have a conversation. But right now, today is about getting to know us, who we are, what we do. The other important piece of this disclosure is basically trust but verify. You got to assume that I might be a well-intentioned person that has no clue how to do what I actually say I'm doing. So you want to make sure that you're consulting with your professional advisors, tax professionals, attorneys, and asking really good questions. We will never be offended if you ask us the hard questions. We pride ourselves in asking the hard questions of the people we work with. And when you ask them of us, we know that you're our people and we're happy to work with you. So quick introduction. This person speaking right now is on the right-hand side of your screen. I'm kiragolden. I've got 15 years of active investing experience, mostly full-time through all of that. I did a brief stint as a Series 7 financial advisor, worked for one of the big firms and doing stocks, bonds, and mutual funds. Took a few years of doing that and quickly discovered that my colleagues in the business were mostly invested in real estate, as was I, and so started focusing full-time on real estate. I own real estate globally. We've got deals in Europe. We've got most of our portfolio in the United States. We also have a project upper right-hand corner in Puerto Rico, and upper left-hand corner is our new office we're going to be opening up here in Denver shortly. So again, we'd love to see you guys there. Not on this call today, but someone you will interact with regularly is Matthew McClellan. He has 20 plus years of marketing experience, and he brings the client relationship management piece to the table, as well as promoting and marketing the investments that we have. Obviously, in order to have successful investments, you need high occupancy, you need good tenancy. He coordinates and manages all that, both with the investors, but also on the assets. He is a top real estate strategist as well. So one of the things we do here are personal strategy sessions. You can do them with myself, with Matthew, with any of the real estate consultants. Everyone on the team brings a background of real estate experience to the table. And what we like to do with our investors is discuss a strategy that we can help execute. And when you work with one of us, you really get all of us. We brainstorm, we share ideas, and we want to make sure you've got a good plan in place. So let's start by talking about why direct source. To follow the theme of the webinar, next best thing to doing it yourself, we believe fundamentally in direct investments. So direct source wealth exists to facilitate and participate in direct investments, meaning we put money in our own deals, and we'll talk about that a little bit too. But because of that, we really are operating under the premise that the best way to make money is to invest directly in deals. That's our bias, that's our belief, and our investors share that bias, and they want to be directly connected to the source. We believe in value for value, transparency, and co-investing. So value for value, we'll talk about each one of those in depth, but value for value is essentially saying we want to give more than we get. And we want to work with people who give more than they want to get. And when we all do that, rising tides raises all ships. Transparency is the key to everything. With transparency, we know that problems come up from time to time in the investing world. There is no such thing as a guarantee, no such thing as a sure deal. There's risk in everything we do. And transparency is our number one way of mitigating that risk and sharing ideas and finding solutions when there are problems. And then co-investing. Co-investing is we put money in our deals. We put money where our mouth is. And I think that speaks for itself. So our belief here is that all things come from source. We are here to be stewards of the things we are entrusted with. This includes people, money, and knowledge. And with these things, we are expected to create value, be honest and transparent, and do unto others as we would have done unto ourselves. We take that approach, that value, that statement very seriously with everything we do here at Direct Source Wealth. When you do think about sort of growing your business beyond what you can do yourself, we think it's important to partner with people who are like-minded. So, working with a good turnkey provider, you won't hardly ever get quite the same returns working with somebody else as when you put your own blood, sweat, and tears and time into a deal. It's just not likely to happen because you're putting the value of your time back into your profits. But working with a good turnkey provider can exchange time for money so that you have the freedom that comes from not having to manage every piece of your investment portfolio. So one thing we say here is we've got you covered. Breaking that down along the three key value components, value for value, we focus on long-term equity. We provide conversion options. In fact, some of the investors on this call today have participated in our conversion options where you can get into a deal in a more secure position, maybe as a lender, and then down the road convert to equity when you've seen the progress happening on the deal. This is one of our ways of standing by and saying, look, we know we're going to deliver. We don't know exactly how, we don't know exactly when. There's always risk in deals, but we're willing to let you put your risk on the back end. Also, we have multi-phased deals, meaning that we raise our capital as needed or slightly before, so that we're not loading a lot of expense onto a deal unnecessarily. So that as money comes in, it's going into a project and there's value created for that value. We also focus very, very efficiently on a low operations burden, and I'll talk about that a little more in our reporting and transparency. But just keeping our operations cost as reasonable as possible so that the deals aren't being looted for operations. And we love the shared economy of scale that comes from being a turnkey client. So when we all work together and we do larger deals like this, we have the ability to hire people at more negotiated prices. I mean, for example, we pay between 3 and maybe 5% max for property management. In fact, I don't think we're paying even 5% anywhere. I think 4.5% is the max we've paid on property management. That comes from having larger projects. We are able to negotiate great pricing with Home Depot. I just put 4 stainless steel, double door sub-zero refrigerators in an apartment building for $1,000 a refrigerator that retail for closer to $1,800. Also, transparency. So moving to the next category, by working with a turnkey provider, one of the things you want to make sure is in place is good transparency. Regular accounting and reports. Depending on the project type, we provide those reports either semi-annually or quarterly. They'll show what money has come in on the project, what money has gone out, what future expenses we predict. We also provide bi-monthly deal updates. So many of you who are on deals with us already are getting twice a month on the 1st and 15th. A real simple overview, what we did the last 2 weeks, what we plan to do the next 2 weeks. Sometimes you'll see in there questions if we're coming up against a problem or a hurdle. You might find that we are going to ask people some opinions, what they think we should be doing on our project. We love to engage with the investors. We feel like, this is not an us versus them. This is not us trying to look good. This is all of us trying to work together to make some good money. We handle most of the heavy lifting, but you guys have great ideas and we love to hear them. Lastly, we share, or actually not lastly, there's two more. We share our documents, pro formas. We love feedback. We let people work through them. That's all wonderful. And we do result analysis. So on every deal that you're on, at the end of the deal, we evaluate how did we do. We compare our actuals versus our pro formas. We also review our budgets, of course, and we review our mandate and our expectations. How often does the project end up the way we think it would? In this particular case, most of the time, our projects don't end up exactly the way we thought they would. They usually end up good, but oftentimes throughout a 2 or 3 year project, we have to constantly go back and finesse and hone the game plan. In fact, that's probably the greatest value we bring to the table, is constantly staying on top of the project and the game plan. And so we like to go back and look and say, okay, what did we think we were going to do here? What did we actually do here? That historical data helps us every time become better and better and better at predicting in future deals what we hope to see happen. Obviously, we don't have a crystal ball, so we can never get those predictions exact, but more data does make us better at being able to analyze deals. Co-investing is another key principle. The principals in our deals put money into the deals. Usually that is at very least my husband and I, but we also have other deals that are run by other sponsors where they're putting money into the deals. And we love to co-invest. So a lot of times we'll invest in deals with some of our Golden Circle members, and other times they'll invest in our deals. We like the diversification that comes with that. The goal is to jointly build for cash flow. So, if you're here and you're thinking, well, should I do turnkey with direct source wealth? And you think that you're going to go out there and, flip a bunch of properties and make $1 million overnight. Great. I'm sure there are some people who have successfully done that model. That is not our focus. We are focused on building long-term intergenerational wealth, intergenerational cash flow that lasts from one generation to the next to the next. Does it mean we never sell? No, of course we sell from time to time, but the market really has to demand it of us. Otherwise, we're in it for long-term cash flow. Additionally, in terms of co-investing, our profit is on the back end. So speaking earlier about our core values, our money comes in when the deal is done. There is some revenue taken from every month's capital raising that keeps the doors open, keeps us functioning, keeps the lights on. But as I shared previously, that operations burden is very low. Our profit is really about that monthly cash flow and building that cash flow portfolio. We want to do that with our investors, not at the expense of them. So that's why we have the co-investing and side-by-side investing. And when it's necessary for general liability, which a lot of our construction projects require, we sign for that liability. Oops, I skipped ahead. So one of the things that we bring to the table
with working with us in order to service our investors and our projects. This is a small snippet of our organizational chart because we do other types of investments besides real estate. We have technology investments and licensing and royalty revenues, and we're even looking at adding an oil and gas section to the business. But real estate is our bread and butter, and so we're focused on that right here in the org chart. So when you look at it, DSW and the investor are at the top of the org chart. We are the ones who are running and own the project. Reporting directly to DSW as the general manager is the operations team. The operations team consists of a docs team, a funding team, an underwriting team, and an accounting HR team. That accounting team will become your friends. They're the ones that get you the updates, the reports, the track, show me the money, and they do that. But equally important is the other side of the org chart, the regional manager for the real estate division. The real estate manager manages our project managers, and every project manager can do up to 3 projects a year. So right now we have 1 regional manager, 2 project managers, and we have 3 active projects, and we're going to be adding a few more over the next few months. And we'll talk a little bit about how you get early access to those deals in a little while. You'll notice under the project manager is the entity that is formed specifically as a single purpose vehicle for a particular project. We're really not that creative here when it comes to this stuff. It's DS1, DS2, DS3, DS4, DS5, DS6, et cetera, et cetera. It stands for direct source. That shows the project number starting in the base year. We also have, reporting to that project manager is the contractor, the title and escrow agents, and the inspector. We have a salaried contractor who reports directly to the company so that we do not have a conflict of interest where the contractor is making a promote on the cost of the project and therefore potentially wants the project to get more expensive. Instead, they're salaried and they're bonus based out on cost savings. We have an inspector who is from a different state to avoid getting too close of a friendship with our contractor. And that person comes out monthly and inspects the project, as well as, by the way, and you can see, we're going to post some videos here shortly on Facebook of our recent visit to the Dayton project. And Matthew's heading out to Puerto Rico, I think tomorrow, to go check on that project. So we, as the principals, also go out on a regular basis, lay eyes and ears on the property, usually show up a day or 2 before expected or stay a day or 2 later than expected, and go walk the property, talk to tenants, and get a sense of what's going on the ground. So that is, when you do turnkey, this is really the meat of it, right? This is what can be nice about not doing it yourself and working with a turnkey provider. And this gets to the crux of the economy of scale. By being able to have these projects shared collectively, we're able to provide sizable benefit to our investors. So we have 3 turnkey models in the real estate division. The first 2 are under the co-investing structure, where you can either come in as an equity investor or as a lender. The equity investing is buy and hold. It's long-term cash flow focused. You receive pass-through tax benefits. So there's a lot of advantages of participating from an equity perspective. But there are also times where it's better from your strategy to be a lender. Maybe you're dealing with an IRA. Maybe you need the funds back in a year, 2 years, whatever it is, and you can't leave them into a project potentially. And so you like the fact that it's a short-term fixed maturity period. You like the fact that there's immediate monthly income, and so you can invest in the lending model. The third model is for investors, we call it the wholly owned model. And that's where an investor most commonly has to do a 1031, needs to identify a property quickly within the 45-day period and also be able to close conveniently. So easy closings, quality deals, and where that income is just wholly owned for the investor. That is not the majority of our projects, but we do have that option available because our underwriting team, going back here, because our underwriting docs team and all of that is in place, you can choose to wholly own a property. We review 15 to 20 deals a week. Many of them are not large enough to be of interest to Direct Source Wealth and our pool of investors, but work out great for an individual investor who wants something between $1 million and $5 million, for their portfolio. So that model is available as well. It doesn't have to be a 1031, but that is just most commonly when it's used. Otherwise, investors tend to just opt for the equity model. Another major advantage of turnkey investing is the diversification, right? So as I mentioned at the beginning, I have a Series 7 background. They beat into my head, diversify, diversify, diversify. I finally came to the conclusion that diversifying for its own sake is stupid. Uh, Having diversification and a bunch of things that lose money doesn't help. You need to be diversified in good quality assets. And oftentimes, to buy the size of real estate asset that really provides good diversification, a single investor can't build a portfolio on their own. When I was just me, especially early on, I might have only had 4 or 5 properties, and that's all I could afford to do by myself. And so I only had that benefit of that diversification. By co-investing, working with turnkey providers and partnering on deals, we've been able to expand our diversification greatly. So you'll see by types of real estate, we participate in vacation rentals, long-term rentals, mixed-use buildings, and senior housing. I didn't include in there some of our alternative portfolio things like storage units and whatnot. There's what we call niche assets that are certainly part of that as well, that fall into the various categories. Geographically, we're diversified. Arizona, Ohio, Chicago. That's funny, I did 2 states in a city, but Chicago really is the bulk of Illinois. Puerto Rico, France, and Washington. And we continue to diversify among other geographies. The last thing is duration. So we're focused on long-term, what I call never properties, the properties we never plan to sell. We might sell them. In fact, I just sold a property recently I never planned to sell. But we buy them to hold them. We do have a small portion of fix and flips. We are opportunistic. In fact, our machinery allows us to be opportunistic very efficiently when the time is right. So a couple of years ago, we were doing fix and flips, mostly in Phoenix, Arizona. Stopped doing that in 2012 when we believed the fix and flip market was, the margins were getting too tight. A great story there. We had one deal that we were able to take down for $29,000, a house for $29 grand, and sell a little over a year later for close to $100,000. So those kinds of margins are not normal at all, but when you see a great opportunity, sometimes you got to pounce on it. Conversion options, so that might be a little bit longer duration where you're going to go in and rather than just do a quick fix and flip, you might convert a building, and spec build. That's, I would say, sort of another medium term where you're going to go in and build to sell. So, these are just 3 types of diversification by co-investing that allows you to spread out and not have, too much in one deal. It also allows you to spread your money into various deals rather than having to put everything in one place. So I mentioned previously the option to get into deals early that are coming up. And at Direct Source Wealth, I mentioned previously, we are a family business, and we are focused on creating and sustaining long-term sustainable intergenerational wealth. To that end, we've created the Golden Circle. There are many benefits, but a few that I wanted to highlight were the fact that investors in the Golden Circle get first right of refusal on premium deals. So when Direct Source Wealth launches a new deal, Direct Source Wealth Golden Circle members get that first opportunity to get into that deal. And as our investor pool grows, and sometimes long before a deal even hits kind of the public investment market, it is fully subscribed by Golden Circle members. Additionally, when there's additional rounds of funding, there's a 2-day early opt-in period for Golden Circle members, so they can get into additional rounds early on specific projects. Reduced management fees and servicing fees if that's part of the type of investment you're in. Unlimited access to our data bank of lectures, education, speaking services, opinion papers, webinars, podcasts, all of the marketing collateral. And an annual investor meet and greet. This is one of my favorite parts because we are looking to build long-term relationships here. We love to get together in person with our investors. Our next meet and greet will be the last week of February. We're doing a Caribbean cruise. We'll be speaking about vacation rentals, of course, and having a chance to network and spend time with other high net worth investors. So again, we're not just about trying to have people invest all of their money with us. We believe in the collaborative advantage, and we want to create and foster opportunities for our investors to do deals not just with us, but with one another, and we want to participate in those. So again, part of our commitment to intergenerational wealth, we extend those golden circle benefits to one generation, junior or senior. So if you're invested and you're managing your parents' money, or if you're invested and you want to get your kids involved, you can extend that one generation, junior or senior, without them having to actually qualify in terms of assets under management. So all of these things are ways that we've created a turnkey investment opportunity that we hope is not only the next best thing to doing it yourself, but maybe even possibly better, because you can build a relationship with us, understand that we are running the deal the way you would, and you can rest easy on a beach somewhere knowing that your investments, your portfolio, more importantly, your future is in good hands, and that we are doing everything you would do, maybe more, to be able to make sure that you are achieving your financial goals and, more importantly, your lifestyle goals. So with that, I will turn this over for questions. We don't have the speaker questions on, so if you type the question into the question box, it'll show up on my screen and we can answer it. As you're typing in your questions, I do want to point out at the bottom of the screen is my email as well as Matthew's email and our contact numbers. Matthew still has our Arizona number, and I have the Denver number on there. But feel free to reach out to us directly with any personal questions you might have, in addition to any group questions on turnkey investing. All right, I have a question here asking about the timeline of most of our deals. So I can't go into a ton of detail about specifics on individual deals in this particular format. It really is a personal conversation. But what I can say is that most of our deals are originally structured 3 years or less, and then there's a long-term buy and hold strategy. So there's usually a way to exit the deal in the first 3 years or less, or participate long-term in that. And we do target double digits returns on the projects. All right, I have another question here asking specifically where we have our active projects right now. So we have a project in Dayton, Ohio. That one is already, I think phase 2 is about to close out and go into phase 3. And that means that the first batch of tenants are going to begin pre-leasing. We have a project down in Puerto Rico that currently is operational and has some partners on that project. There's still some units where we are waiting on certificate of occupancies, as actually some of you on the call know, but making progress there. And Matthew will, of course, be pushing on that when he goes down there. And we have an active project in kind of our final phase of due diligence in Atlanta. So that project will be closing up here shortly. We'll either be saying yes or no on that one pretty soon. We've got the team going down and building the mandate. Okay, I got a question on what I just said, which is what's a mandate? That's a great question. So whenever we do a project, we create what we call a mandate. And the mandate is essentially maybe a way of thinking of it as a mission statement for the project. So we look at the project, we look at, is this going to be a vacation rental? Is this going to be a long-term rental? Is this a high-end property? Is it a low-end property? Are we, who's our target audience on the property? What's the scope of work, construction-wise, that needs to be done on the property? What is the ultimate exit strategy? So it's more than sort of a pro forma underwriting, which is strictly by the numbers. The mandate is really the mission statement or the story of that asset, what we're going to achieve there, what we hope to see happen. It's a little bit more qualitative than a pro forma. We do the pro forma, of course, as well to have the quantitative element, but every asset has a story, has a character to it, and we help define and create that. So to give an example, the project in Dayton, Ohio, is 315-unit apartment complex, completely distressed asset. It's been through multiple owners that have not been able to make the project successful, and really, when we took it over, had 10 residents. It's now down to 4. We've gotten out anyone who's not paying. We created a mission for that property to turn it into a safe and secure place for people to live that provided housing for a target demographic that needs housing in that area, and also gave a timeline and said, okay, we want to get this done in a year. We also want this project to be sort of a flagship project to kind of show what can be accomplished when you have a great team. And to that end, that team has been killing it. They've been actively, since we got permits issued and everything going, they've been active since July 15th was the kickoff, and we're just about to hit August 15th. Demo's done. The rough-ins will be done by the end of August. Pre-leasing is starting at the end of August, and by middle to end of September, those first units are going to be ready for occupancy. So in essentially 60 days, they will have gotten 45 units complete, and a few weeks after that, the first 95 units will be live within a couple of months. So I mean, just really, the team there is just doing a phenomenal job. So that's the mandate in that situation. Whereas Puerto Rico, the mandate, and it's a good example of how a deal evolves. When we originally took down that deal, we thought we would do condo conversions. We thought we'd fix them up and sell them. As we got deeper into our analysis and we saw the opportunity for vacation rentals and the high demand in that area, we discovered that we needed to update our mandate, and that selling those units really was not the most profitable scenario, but rather renting them out for really nice high cap rates was a better way to go. So we updated the mandate. So that's what a mandate is. Great question. Okay. Any other questions? I'll give you guys another couple of minutes if anyone has anything they would like to type in. All right. Well, thank you guys very much for joining us today. We look forward to having some continued conversations. Please feel free to email or call, and we will be able to discuss further if turnkey investing with Direct Source Wealth is appropriate for your portfolio. Thank you, and have a wonderful day.